Alright, so I'm gonna do a quick trade breakdown of the two trades that I've taken, one on Euro USD and then one on GBP USD. So on DXY on the daily, currently in a daily market maker sell model, pushing lower, retracing into bearish daily PD arrays, making new lows. So we took out this drawn liquidity, and we also took out this low, and then on Wednesday we took out the low, also the previous day low, closed back inside the previous day range. So on Friday we skipped the day because of Christmas. So yeah, Friday we had this push higher, but I wanted to see if we can push into this daily volume imbalance and order block. And if you go on a 1 hour, I mentioned in the weekly outlook that I did that we had these hourly equal highs, so this high and this high, and we had this opening gap which we haven't tapped into yet. So I wanted to see price take out this this low into this order block and this inversion fair value gap, and then see if we can frame longs into the Tuesday highs, not the Tuesday highs, but yeah, those hourly equal highs, even this 4 hour high. So that was the game plan, and I said that the reason for this is because we're creating this daily 3-bar swing, taking out the low, took out the previous day low, pushing higher. So you're expecting the next daily candle to retrace into the previous day's range and push higher, and then same with this one. You want to see price retrace into the previous day's range, ideally not take out the previous day low as well, and then push higher. And I mentioned that I wanted to see this either Monday or Tuesday, because if you look at the economic calendar, or even just the normal calendar, 31st New Year's Eve, not trading that, and the 1st New Year's Day, not trading that, and then Friday's probably nothing as well. So the only thing that I saw this week was a quick retracement play into these highs, these equal highs, and then probably call it a week and see how the yearly candle is forming. So in Asia, already in Asia, I was watching this because we had this push down heading into the weekly open, into the key level and the low, which I wanted to see price use as inducement to fuel price to push higher. So took out the low into the inside the hourly order block, and then we saw this displacement candle close, took out the low again. So we formed this order block, and we have this upwards candle, which you can consider as a breaker, but I don't really consider it a high probability breaker, because you want to see, like, for example, I prefer breakers if they have like consecutive up close candles, like this for example. So 2 down close candles to push higher, and then you close below the bodies of the candles, you form that high probability breaker. But yeah, so but for me it was fine, formed the fair value gap as well. So on EU, once DXY tapped into this fair value gap, I took my entry on EU, and then we got this push higher all the way into the equal highs, which I was anticipating price to take out. So got that daily open, low, high, close. And then if you go on EU quickly, same thing on EU. We had this buy side as drawn liquidity, but because we've taken out this high and we've seen this candle close back inside the previous day's range, this candle's low is likely the next drawn liquidity. Just simple premium to discount. You want to see price come back into the 50% with this order block and this fair value gap. So daily candle closures confirming that likely sweep, close inside the previous day's range. Even this candle's confirming. Didn't take out this high, forming a 3-bar swing, and we haven't taken out this. We haven't tapped into the daily fair value gap. So on the Monday, you can anticipate this high to stay intact, and you can anticipate price to come back into that previous day's range, and then come all the way into that daily fair value gap. So you could take a swing entry, like just short above this high, stops here, and then TP down here. But personally, I wanted to wait for some sort of confirmation from here, just for my personal preference. So I got a sweep, and then confirm this order block. Same thing on DXY breaker order block. So show the next candle's open, low, high, close, and then we just immediately just dump straight to the TP here. I wanted to add more risk into this fair value gap, but we didn't get that. But yeah, DXY tapped into that fair value gap, and E, because it was a weaker pair, we didn't get that push high into into this fair value gap, this order block. But yeah, happy with the trade. Dump straight TP, pretty much zero drawdown. Not zero, but pretty much no drawdown, clean trade. So yeah, and then we'll go on to the pound trade as well. So I mentioned that on Euro Pound, I wanted to see price come up into this daily fair value gap here, meaning that Euro could be the stronger pair, and Pound could be the weaker pair. So at the time, Asia session, it was around here. We saw this drop on Euro Pound, but just in case price took out this low into this order block, and then we got the push higher. I was watching for Pound as well for shorts, and Pound offered this beautiful setup as well. So same level, same thing on EU and G, 4-hour breaker, 4-hour order block. Well, actually, we never confirmed the break and order block on EU, but on G, but EU we confirmed it with this kind of closure. But same thing anyway. Wanted to see a sweep of this high into the there's not really any hourly PD arrays, but yeah, I just wanted to see that sweep because we had DXY given that correlation anyway with the order block. Swept the high, push lower. Now in here there's not really any entry confirmation except this one right here, where we had this high, took out the high, and then we closed below. This one is probably one of my favorite entry patterns, where you'll see price come up and then fail swinging. So instead of price taking out this high, we come up, sweep the high again, and then you get that breaker confirmation. So this is one of entry confirmations that I look for a lot of the time, especially if I'm looking for scalps. So in this case, if we close below these up close candles, just by itself, I probably would have taken a trade anyway. But because we had this extra confirmation, formed this new order block, formed this breaker, and we also closed below these two up close candles anyway, that was a high probability trade confirmation that we'll probably just dump straight into these lows and then these lows next. So shorted here, and then I pretty much took almost everything off at these lows, so around 2.2, 2.3 ish, around there, because DXY already took out the high time frame buy side. Look at that, 12.15. So 12.15 candle. So I pretty much closed most of my position here, and then I had like a small runner for this low, just because these lows were so close in proximity that price would likely also take out this low. So TP'd pretty much everything here for 2.7R, and yeah, now price is just consolidating. So yeah, I'm just gonna call it a week now. You can see by this chart is not like a high probability chart now, just consolidating heading into the yearly close. So same thing with euro, just consolidating heading into the yearly close. Managed to get my quick trade in. We'll just do one more recap. So for retracement plays, you always want to see some sort of higher time frame sweep. So for example, we took out a higher time frame draw here. You could also just use the previous day's range. So like for example, we took out a Tuesday high, close back inside the range. What's the next draw liquidity? Likely this Tuesday low. And what makes it even more higher probability, daily fair value gap, daily order block, discount of the range. So just a typical external range back to internal, and then we'll probably go back for external again, meaning these highs. So had the 4 hour giving out confirmation, 4 hour displacement, inverted the fair value gap, forming bearish structure, retraced, fell swing, even came up and swept the high, which is always a confluence. You know, you always want to see price in bearish order flow. You want to see price come and sweep highs and reject. So same, like for example here, came up and then displaced lower. That's a bearish signature there. That's clear bearish structure. So daily candle closure confirming, giving that confirmation. 4 hours giving that confirmation. 1 hour is also giving that confirmation. Displacement, order block, sweep. So yeah, all you need to do is just wait for your lower time frame confirmation here, and you have this drawn liquidity which is still untapped. So yeah, that's all I look for when it comes to retracement plays. Just daily candle closure confirming, because these they're usually more risky plays because they're against the higher time frame order flow. So you always want the daily and the 4 hour to give you the confirmation that price is likely going to go for the on EU, that price is going to go for the internal draw before making new highs. So yeah, untapped for daily fair value gap, daily candle closure closing inside the previous day range. Nice little draw in liquidity. So yeah, we'll see how the weekly candle closure looks, because price could also come back into this lower daily fair value gap. We could just sell off here and then come into this and then push higher. But if we're bullish, to be honest, I probably prefer if we go higher from this order block and daily fair value gap instead. So we'll see how the weekly candle closes and the yearly candle, and then we'll see try to frame a bias for the first week of the year. So yeah.